Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for November 1st. I hope you guys had a really nice weekend. Managed to have a little fun, recharge your batteries, maybe do a little trick-or-treating with the kids, or man the door waiting for treaters to come. Down here in Florida, the weather just broke, and finally we've had some really, really nice weather over the weekend. More or less maybe high 50s in the day and or in the morning, and then like 70 during the day. It's been really, really nice, and I hope it was nice for you over the weekend. Okay, as we get into this, don't forget to run your player at 1.25x. Think you'll like that a lot. Running through futures real quick. Equities up between 0.4 and 0.6. Bitcoin's down about 0.8%. Had oil and nat gas up about 0.5%. Precious metals flat. On the macro front, we've got PMI manufacturing number, an ISM services number, and construction spending this morning. But what the big one is this week is we've got the FOMC meeting that kicks off tomorrow and culminates with their rate announcement, their plans at 2 o'clock on Wednesday. And then, of course, the J. Powell presser at 2:30. And then on Friday, we've got the October jobs report. And we'll see, if all these jobs that are available have starting to get filled, or if there's still a big disconnect between jobs available and the people that are unemployed. On the earnings front, we're now on the downside of the earnings mountain, but just over the top. So we still got a long ways to go. I didn't see any real marquee names before the bell this morning, but this afternoon we've got Chegg, we've got NXPI semis. We've got two fertilizer stocks, Mosaic and Nutrien. Those are going to be interesting to look at. In fact, on the blog this morning, when I publish it, there's an article that talks about fertilizer pricing and the impact it's going to have on farmers and food pricing for next year. So I provided a link for that in the blog write-up this morning. Before we dive into the charts, I want to just give you a little something, maybe a little inspirational thing to you. I was going through that Tom Brady podcast that I forwarded last week, and there's also a write-up and a link in the blog today about it. But one of the media reporters asked him, what's it like, walking up to the line of scrimmage after being in the league 22 years. And what he said was pretty interesting. He said, well, after you've done it so long, when you sit back, the pre-snap routine where you're assessing the defense, he says at this point, he's never tricked. He knows all the setups. He knows all the disguises. He knows all the schemes by being in the league that long. And then he said, when I get up there and I see something, then I can call an audible if the play is not suited correctly to the defense that I see. Then I can call an audible and basically a new play and reposition the players and the routes that would attack the vulnerability of whatever particular alignment the defense has. And he said something to the effect of, it's a lot easier playing the game when you have the answers to the test right in front of you. And he said what happens is, as quarterbacks come into the league, it takes them 12 to 15 years to really, really, really integrate everything that's required to become a great quarterback. And he said, the unfortunate part is, one, quarterbacks may never make it that far. And two, if they make it 12 to 15 years, they're on the doorstep of retirement. And what he said was, by being fortunate and working hard, keeping my body healthy, I've been able to have some of the best years of my career now, rather than in the beginning when my physical skills may have been better, but at a big disadvantage as far as my mental acuity of the game. And he said, now, nobody's fooling me. It's just a matter of execution. So it's the same way in our trading. Time in the chair is going to make a huge difference in your trading. You're going to get to the point where you have almost instantaneous pattern recognition of the different technical analysis structures. You're going to get to know the stocks that you like to trade, the tendencies, the idiosyncrasies involved with each stock. And as time goes along, you're going to migrate from having to worry about the structure of the price chart versus the execution of a trade. And where Brady is at now is the place we want to be in our trading. That is, when a chart sets up, you're going to know exactly what the structure is. You're going to know exactly what price needs to do. And then you're going to have the experience to know if that's a good setup or a bad setup. Is it a trade you want to take or a trade that you want to let go? So keep that in mind as you're putting in the time and the work, that it does get easier, because the structures are the same. They don't change. These same technical analysis structures have been around forever. So it's just a matter of integrating the ones that you like into your program. Now, as a follow-up to that, the Tampa Bay Buccaneers were playing the Saints last night on TV, and I was watching most of the game, but most importantly, the final 2 minutes. The Saints had pulled ahead by, 3 or 4 points, but they left Tom Brady like a minute 50 on the clock, which is more than enough to, march down there, get a field goal, and win. So he had a couple of incomplete passes, and then he basically threw an interception, which effectively ended the game. It was a pick six. The guy, broke on the ball, picked it off, ran it in, and then that was it. They were down 9 points with, 40 seconds left to go. For all intents and purposes, the game was over. But it was interesting. The camera kept an eye on Brady as he walked off the field. Obviously, he was a little deflated. He knew he had made a mistake. He knew it was his fault. He knew the game was over. But as the camera panned to him as he walked to the bench, I was thinking to myself, what's he going to do? Is he going to take off his helmet and slam it down? Is he going to walk by a Gatorade cooler and, push it over? Is he going to have a totally disgusted look on his face? No. What he did was what he always does. He walked to the end of the bench, calmly set his helmet down, grabbed a tablet PC, and he reviewed the play. And that's what he does after every series, good or bad. He reviews the play even though the game was over, even though there was only 40 seconds left. It's all about, wow, did I not see a guy? Did the receiver blow the route? Or did I simply make a bad throw? And so and then it made sense after he did it. That's why you're the greatest, right? That's what the greatest people in any sport, business, etc. do. They learn from their mistakes, even when you lose, learn something. And so I thought that was really, really informative and a good lesson for us all. When we have a big disappointment, a bad trade, it's easy to get disgusted. Focus on what you can learn and then integrate that into your process. That's the tuition that you have to pay in order to get good. So, okay, let's go through it quickly. US dollar, big wide-ranging bar on Friday, touching both the upper end here at 94.50 and the lower end at 93.50. So we're still in that range. I would expect some fireworks on a breakout or breakdown from there. Here we are on the 10-year yield. We had a little breakout, false breakout, pulled back into the range, and now probably waiting on Powell midweek to do something, and then I would imagine rates will react off of Powell. We talked about TLT re-entering this trading range from below. So our technical target is this 149.50 for starters, and then 152 as a T2 on this structure. Any break back below the 200 would then put this on a downward path if rates go higher. Here's the VIX. Pretty big bar on Friday, but then they closed it at the low of the range down here at 1625. So as long as we can hold below 18, I think the market can stay constructive. Any kind of break above 18, you're probably going to be seeing a lot of turbulence on your screen. So always good to keep an eye on the VIX. Looking at the equal weight SPY, we broke out, but then we came back for a back test and really have not confirmed the all-time highs on SPY, which is right here, all-time high here, and less than that on the equal weight. So what you want to see is, of course, broader participation and have that equal weighted S&P 500 index start playing a little catch up to the cap weighted one. So here on SPY, we've just been grinding higher. We had one bad bar there. There's also a gap in there that I haven't put in. Just noticed that right here. I'll put that in for next time. But for today, I think you can use 458 as your pivot. As long as we hold that, the door is open for higher ground. We've got a pending bull cross on our PPO, and we are right back here close to trend and looking to move back into a good overbought situation. So we may see markets kind of go into suspended animation ahead of the FOMC. We're just going to have to see. Usually that happens on a Tuesday, with the results on Wednesday. So I think today will probably be, somewhat normal market action. And then tomorrow we may see that slowdown I was talking about. So here it is on a 30-minute chart, just giving you some resolution. Here's that 458 level. And, if it drops down, this 456 should be really nice support. Notice the larger volume over price bar. Notice all the, all the tags of that level here. And so if we were to lose 458, I would be a buyer down at 456 to see if all this prior support holds. Equal weighted QQQ, you can see that we've still got this double top structure in place, which is not really so hot. We've got bearish divergences on the RSI and PPO, and we're pinned under this level here at 87.5, which was the prior high. So again, what we'd like to see to help confirm the bullish case is have the equal weight break out along with the cap weighted one. And you can see here on the QQQ, we have broken out. We're solidly in the bullish regime on momentum, solidly green range on RSI. So those are both operating in their bullish regimes. I think you stay long here against 384 and look for moves higher. Keep in mind, I do have this within a channel. So, we get up to, 388 in that range. I'd expect a little, kind of check back, possibly back to the midpoint of the channel. You can see that we've been operating nicely in the upper half of this channel, and we would want to see price come back below 384, because then we will have missed or lost the midpoint and this first support level, and that would open the door to 382 and possibly 380 to fill this little gap. And then once you're at 380, you might as well go down and touch the bottom of the channel at 378. And that's what we did down here. So use those channel, upper and lower channel and midpoint as a nice reference in your trading. And I think it'll help a lot. And here it is on the 30, just blown up. Same levels, just a little bit more granularity for you. If you were to be looking for hints on the indicators, I'd be looking for RSI to roll over and break below trend, or momentum rolling over and falling below the zero line. Those would be bearish technical events, but we don't have that now. So as far as I'm concerned, all systems are go. IWM did have a nice Thursday and Friday. We lifted up off the 50 EMA. Now we've been pinned under this 228. I think that's your perfect pivot today. A break above 228 opens up 229 and 230 at the prior high. And really what I want to see is a move above 230, and then that would open the door towards 234, which is the high of that big trading range we talked about last week. So that would be a breakout level. And here's just some granularity for you on the IWM 30 chart. You can see a lot of candles touching that 228 level. And so if we can get a break above that today and hold it, the door would be open to 229 and then 230, 230.50, something like that. Okay, moving on to FATMAAN. And I want to welcome any new visitors to the channel. I really appreciate you spending some time with me this morning. I hope you're getting a lot out of the commentary with me calling out the levels. You can use those in your active trading today. Then you can focus your efforts 100% on execution, because that's the one thing I can't do, right? I can tell you where price will most likely react, but deciding whether to go long or short or just step aside is a trading decision that you'll have to make on your own. I'm always here to help, and I will help, but most often the case it's a bang bang situation. So hit the subscribe button and the alarm bell, hit the like button. That would be great. And then if you jump over in the show notes, there's a link to the blog site where you can join the team, and then you'll get an email each and every time I send out content. You won't have to look for it. So Facebook, the new Meta, had been in a selling mode. Then we had a rally on Thursday and Friday that brought price up to this 323 area. And there's actually, I didn't draw it in here, but at 326, you may want to mark a level there. Why? Because we've had multiple candles reach up to that 326 and get stopped. So today, down here at 324, if you get a chance to buy that, I would buy it there and see if you can be on board for a long and get through 226, because above that, 326, because above that, you have the gap opening at 328, and even if it didn't get through, you would still have a nice trade on your hands. So that's how I would kind of work with Facebook. Apple. So we had earnings Thursday night. This was the Friday morning candle, leaving a huge gap above and spending the first 3 hours of the morning kind of testing this 147 area. And that was an area we already had on the chart. So if you were smart enough or good enough to say, hey, if the bears can't, after 3 hours, if the bears can't push it down past 147, that would be an objective long. And the folks that did that got a nice push back up into the gap. And so now we're a third of the way through the gap. And if you are active in trading it, a break above 150 now will open up the door to 150, 150, and then 150, 250 for that full gap fill. And that's the way I would play it. On the short side, I wouldn't do anything unless, price came back and lost 148.50. I think this one may be a tough one to short. You may be able to scalp $1 here and there, but I think the trajectory on this is going to be higher, at least to fill this gap. So that would be my base case. Tesla is doing its own thing, just keeps rolling. I've dropped in a little trend line here just for visual reference, but I think as long as price holds 1100, there's nothing much to do except stay long. And if you're really active, you can just keep rolling your strikes higher if as price advances, and then harvest those gains as price moves along. But just keep in mind, this positive price action has been happening as momentum has been declining. What you want to see is this thing, it's already flattened out. What you want to see is it curl up. And if you can get a high level bull cross coupled with RSI over 70, that's a formula for going much higher. Speaking of going higher, Microsoft is on an epic run here, taking out 330 on Friday. Actually, it took out 330 at 330, so that was nice. Stay long against 330. I think this is going higher. If there is a pullback, I think it's going to get contained at either 325 or the 322 area back here. But I think folks recognize that it's a best-in-class company. I thought it would be here a lot sooner after it cracked 300, but it decided to spend a good amount of time consolidating. And actually, that's why I think it's going to go a lot higher, because we have had, these resting periods even back into September. So I think some energy has been built up, and I think a lot of the sellers have already gone. Amazon, much like the Apple chart, came down here to well-documented support, entered the gap, and now I think you can use 3380 as your pivot point, favoring an upside fill of the gap. If price were to come back to 3340, I think you got to try a long there for a back test of the gap, and then get a good entry point for going higher. Google. Big impulsive move on Wednesday after earnings, and then doing some flagging action here above 2,900. I think Google is about as simple as it gets. Stay long above 2,900 and see if you can get a push to 3,000 and higher. I mean, that's basically right there. I think if you got a nice move out of this bull flag, I think you could be in the 3100s quite reasonably. Netflix, I kind of lost track of this one Thursday and Friday. Not sure why, but really nice close on Friday. Look at that. So we're up at, we're basically at 700 now. So remember that. Remember Jesse Livermore. After you cross those round numbers, there's a psychological effect that makes price want to run. So if we get up to 700, the perfect setup will be some consolidation under 700, that round number, and then a breakout. And then that's something you can buy, knowing that there's a good shelf of support there at 700. If this were to just rocket up past 700, I don't think you can buy it like that. I think you've got to wait. If you weren't able to get this one or get the breakout at 675, I don't think you can buy it. If it's going vertical like that, there's a lot of risk and you really don't have anything to shoot against. So I would wait until it consolidates. And here's a nice example of that high-level bull cross that I was just talking about on Tesla. This is what you want to see. A big move higher, a little bit of consolidation, and then your high level PPO bull cross, and then momentum continuing to accelerate. And then SMH, we're right here at the prior high. I think 274 is your pivot. A break above that sends it higher. Maybe the let me look. Let me look at this for a second. I may have steered you wrong. Yeah, the prior high was, I'm sorry, the prior high was 276. So back here on the hour chart, we've got a break above 274 would be a breakout, but then you've got the all-time high up at 276. And remember, on a measured move basis, out of the consolidation area, we're looking for something in the mid 290s. So on a measured move basis, we're just getting started. So don't think you've missed the move. All right, big week with the FOMC. Moving into the best seasonal period we have on the calendar, November, December. We can't take for granted that we're going to run up, into the new year, but we've certainly got to be ready for that. Seasonality is in our favor, and Jay Powell will probably have something to do with it, depending on what he says. But I'm optimistic that we can have a really strong November and December. So we'll see what happens. So, all right, this has been Chris Buss with Traders Profit Compass. Hope you enjoyed the video. Talk to you next time.